Okay, so today I'm going to be reviewing one of my most used trading strategy that I have been making money every single day from like 9 a.m. to 11 a.m. on Eastern time. So let's begin. First, I'm going to start with marking the beginning of the session, which is around 8 o'clock, and I'm going to mark the end of the session, which is about 11 o'clock. So nothing beyond 12 for sure. And as you can see, this is the first trading day of the year on the 2nd of January 2026, and here we can see a huge drop right here. And the reason why I'm selecting this time is because New York session is one of the most volatile, which means I can actually get a lot of opportunity to actually making 1,000 point, 2,000 point, or even beyond that. So for example, on this one, if we count it from top to bottom, the top would be 4,400, down to the bottom would be around 4,330. That's around 7,000 points. Of course, we're never gonna get the top and we're never gonna get the bottom. But within this area right here, I actually get a lot of opportunity to make at least 1,000 to 2,000 points as long as I know the direction. Now, how am I going to know the direction? I only use 2 EMA lines here. You can use more lines. However, I'm gonna use my main line, which is 144, and the second would be the 15 EMA. So first, at the beginning of the session, I will look for the bias and see that, okay, we are actually on a buy bias because it has been trading up all the way here from the beginning of the day. However, when it actually trading up that much, I actually gonna be zooming in. Let's see, I don't know what will happen here, but I'll be zooming in and let's see, that's a huge sharp drop right here, which means, yeah, there is likely that the price could be a sideways because it's been up for so long. So I would actually drew the zone right here, the sideways zone, where it will break out. And in the first hour between 8 to 9 p.m., I'm not going to make any decision just yet because if I do make a decision too early, I might get swept out. And you don't want that to happen. What you want is to look at it, look for a clear break direction, and come back for a retest. Now, when it actually broke out this way, a lot of people actually buying this and thought that it's gonna break over 4,400, it's gonna go up to 4,450. Well, this is the thing. I have another tools with me called the DZV that already know that the price is already exaggerated. But if let's say you don't know that, you're only using free tools here, here's my simple trade. I will wait until it actually reaches 9 o'clock. Now, once the 9 o'clock reach, this hourly candle has been a deep red, and we can actually see that it over 3,000 points. And of course, a lot of people will be saying like, whoa, it fall down that much already. It might have been reversing out. Well, I don't care. The fact is that it fall down 3,000 points at the beginning hour before New York session start. So I will be more biased that it will fall down even more. If it does go up, I will hit my stop loss. And as long as it stay under my main line, which is basically the EMA 144, I will continue to sell. So if the price it actually come down here, this is what I'm going to do. As long as the price cannot go above the EMA 144, I am going to be shorting it, and I'm going to be looking for the price action. After it actually dropped down this hard, there is a price action to reverse up. Don't buy it right here because you might get swept out. Like if you will buy it right here and you thought that this is already the pin buy that I'm talking about, it had to reverse up. It might not because the momentum of the bear already dropping so hard right here. What you want to do is wait for the pullback, then selling it. Okay, so right here, after it actually coming down here, having this spike and pulling back up, you can see that it stopped right around here after it leaving a topping tail here and a little bit of doji. Once it dropped down, you can actually clearly place a short order, and this will be safer for you to actually trade it than just simply, trying to catch the trend when it fall down this much, or trying to create reversal of it, both of which is not a valid trade. What you want to do is try to catch this kind of trade where you have a clear stop loss. Once it dropped down, it should not go back up towards the high again, because it already had a reversal. And what you want next is to have a one-to-one risk reward so that you can actually secure your first profit. So in this case, I have 500 points. So once that dropped down, it already dropped to the first target, which is 500 points. Then you can actually go for a second target, which is going to be about 1,000 points. And right here, it looks like we just nicked it. Don't try to get the whole thing. If, let's say, you don't get the whole 1,000 point and it come here like about 800 or 900 points, just take the profit right here, because what you want is the profit. You already secure your one-to-one. What you got right here would be an extra, and you don't want to just try to be so uptight about getting that 10 or 20 points just so you can have the exact 1,000 points. Okay, so once it drop down hard, it clearly that it doesn't want to go down, especially right here at 43.60. It looks like it has a huge support right here. So if it does make a reversal, you want to secure your profit right here. Of course, when you actually in action, it's easier to look at it when you actually watching it from the past. But when you're actually playing for real, it's quite difficult to see where it actually is going. So for example, let's say if I take replay right here, if this were the case right now that the price is going up, I'm actually waiting for it to retest back to around 43.80 here before I actually placing my short order. However, as you can see back there, that the price can never go up to that high, and it's actually just dancing around 43.70. At this point, I would say that, hey, if it cannot break above 43.70, this is where I have to take the risk. And I'm actually taking it at the break of 43.70, like around here at around 43.69. And I have my stop loss, of course, always have a stop loss at around 43.74, which is basically should not be going above the high. What if it going above the high? Then I will be waiting to see if I'm gonna have another drop. So for example, let's say if it hit my stop loss and it go up here, I will look for another price action, look that it cannot go back above 43.80, then selling it down again. If it were to hit a stop loss, that would be my case. But it did not, and it just keep on falling down. So right here, like I said before, we just need to secure our first target, and then we're riding it out for a 1 to 2, which is basically a 1,000. So my average would be around like 1 to 1.5 in terms of my risk reward. But with the secure of half, I'm actually getting a better feelings to actually going on some more. So this is basically how I play. And some might say that, hey, what if I want a better RR than 1 to 2? Well, here's where the EMA 15 comes in. When I said that EMA 15 is used to look at if the trend is strong or not. If the trend is sideways like this, then yeah, it might not be as strong. But when it dropped and the trend, the EMA 15, the speed line right here is actually diagonal. Well, I am going to hold my trade right here until that is a spike like this, or it actually breaking the speed line. Well, in this case, it doesn't break. I am going to continue to hold right here. Actually, this is just touching it. It's still not breaking yet. So I'm still going to be holding it through all the way to the end. This is where it's breaking. Once it actually staying above, after it finishes and the second candle cannot go back down anymore, then I will be closing this position. This second trade, if I were to hold it, I will be having only like about 750 points. Well, that's the risk that you're trying to do here. If in this case, if it can hold it, let's see if I can actually find one that is holding here, because at the beginning, this will be a really nice example. A lot of people will be satisfied with like, 1,000 point, 2,000 point, but it can actually keep going until it actually break the speed EMA here. So let's see if we can actually cut it some more. So for example, if this is a really good example here. If you were to be playing here and then cutting at this after it cannot break above the EMA 15 right here, the speed line, well, you can actually have the stop loss at 500 points. And here's the thing. Wait until it actually go beyond the second target at 1,000 point and just keep on riding this trend all the way down until right here at 42.38. That's where I would take my profit. So you actually get at least like a 1,500 points right here to secure your profit. That is basically my strategy. It is a EMA retest follow trend strategy that I use to trade gold every single day. So if you like that, please like, subscribe, and share it to your friends. And if you want to learn more, be sure to check out the class. The link is down below, and I will see you in my Discord group. Have a good one. Bye, guys.